Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Always do your best. This is a great card. Take action on your ideas. Doing your best means to take action on your ideas. Without action upon your idea, there'll be no manifestation, no results, and no reward. Market-wise, let's take a look at it out here. We had the Dow Industrials up 306, NASDAQ up 112, S&P's up 36. Percentage-wise up here, that's the Dow up 1.2%, NASDAQ up 1.6, S&P's up 1. That being said, if we go over to the Dow Industrials and we take a look at it, what you're going to have out here, folks, this is up on anemic volume. We did 825 million versus 930 yesterday versus downtown at 1.3. We go to the NASDAQ composite, a little better volume, no doubt. But bottom line, we did 2.2 yesterday, did 2 today. We go take a look at the SPY, the S&P. Inside the SPY, what you're going to see, SPY out here today did 100 million. Yesterday you did 120. You're going into, and you're still going into 249, so it's a big number. What the SPY did do, it did close over the last counter trend bounce that we had, which was on the 7th of February, 272.36. We're at 272.93. That sets up a run to 275.41. So bottom line, that's another, $2.50. NDX 100, 3 Qs also got into its downdraft by now. The Qs, they did lighter volume also, slightly lighter, 49 million. We did 52 yesterday. You're coming into 105 million as well as 68. Now, what the Qs did do is this. They got into the low of the downdraft, the first day of the downdraft, which is on February 2nd. That low is 164.47, and what that does set up is that you can get up to 167.70. IWM, what do we got with the small caps? Small caps got weaker out here today. Small caps, we're up $1.65. We are trading 152.80. This puts game that's going into 52 million shares. You can see a 30 million shares shot, but bottom line, this also looks like it's going to try to get into 153.51. Gold caught a bid out here. Once again, bottom line is that what you did have, you get a sideways move on it. That being said, you got some juice behind it. So we did 251,000 contracts out here. You're laying at the last high from yesterday. Yesterday we went from 319 to 358. Bottom line, I expect what you're going to see out here, more than likely we're going to go for this high tomorrow. The 370.50. The reason I'm saying you're going to go for the high tomorrow, if we go into the King Dollar, what you're going to see with King Dollar is that this came down 475 ticks today. You did 27,000 contracts. You're laying at the lows. The lows from the January 26th time frame to February 2nd are right where we are, 88,400. To 88,740, and right now we're at 88,530. If we go over and we take a look at the yen, the correlation, of course, inside this yen has everything to do with the aspect of the gold contract. The yen right now was down 87 today. You're at 106.13, and this is pretty intense, man, because this is barreling its way down into this 100 mark. So the lower that the yen goes, meaning lower in price, the stronger the yen is. This is saying that you're 106 yen equals $1. Bottom line, you go back a couple months, you were at 118. You go back 3 months, you're at 125. So you can see the correlation. That is one big correlation. When we take this correlation and you put it and you compare it to the inverse correlation of gold, what you're going to see is that as the yen gets stronger, bottom line, gold also gets stronger. Let me put this on a 2-year. You can see the correlation. The correlation is pretty intense. So bottom line is that if we go, let's go to the Nikkei actually for a second. So the Nikkei Last night, I believe the Nikkei was up last night. Yeah, you're up 310 last night, 21,460. But, oh, I see. That's hardly no movement. Because what happens with the Nikkei, folks, is that as the yen gets stronger, bottom line, what that does is that puts pressure inside the Nikkei. I expect what you're going to see this Nikkei tonight. This is going to get down into 21,078. That takes off about the 300 or 400 that are put on. Bottom line is that that's going to be more selling pressure inside the Nikkei. So I suspect what you're going to see is this. Give it about 6 hours. That's when the Nikkei is going to be open. Yeah, it's 10 o'clock. You're going to get pressure inside the yen, the dollar, and the metals. And I expect you're going to see that more than likely out here tonight. We're going to take a look at what just happened now. This is really going to be cool. And this is going to be info all over the place out here tonight and more so tomorrow morning. And what it's going to be, what it's all about is that, let's go take a look at the 10-year. What you have with the note and bond market, folks, is that China, their treasuries rose the most in 7 years. This is a big, big deal, folks. Why is it a big deal? Because guess what? We all are speculating that, yes, our rates are going up. We know that the Fed is buying less bonds, but guess what? China is coming in hand over fist. And these numbers here are December numbers. So if I go back to December 30th, just to give you an idea, the 10-year on December 30th was 124. If they liked bonds at 124, they're going to love them at 120.11. This is just released from the Treasury Department, folks. And, you know, bottom line is that, you know, the speculation out here has been for a while that, okay, what happens if China starts selling? As Japan starts selling, is that going to get worse? Well, the bottom line is that they're net buyers. They're net buyers in a big way. And the net buyers, the foreign net buyers, it equaled 35.1 billion in December. Right now, the China, I believe it's 1.13 trillion, I think. I think that's what they have. I'll get you that exact number, but it is a monster number, folks. Yeah, it's 1.18 trillion they have as of December 31st in our treasuries. You stay right there, folks. We're coming right back.